Okay, my bad. I lost my internet connection right there. Anyway, I have posted it, so you have access to that. I don't know why this disappeared, but that's what we are targeting, and we want to trade from here. Okay, we want to trade from there. But watch this candle, okay? This candle is going to be everything. We need that candle to close bearish, okay? We need that candle to close bearish. Once that candle closes, then this level is important. If it does not close and it comes back up, it's not good, okay? So we want this to stay open. And I was talking about this one, time and price, okay? Time and price, fair value gap, time of the day, boom, sell off. So the next downside objective, we've actually swept it. Okay, not yet. Let me see if they went exactly where I wanted them to. Yes, right there. So this can cause price to give a bit of a retracement. So watch in here next week. Let's go to the, yeah, this is the drawn liquidity. Okay, we need that low to be taken, but it's a market maker sell model, and I've taught you in the past that in a market maker sell model, the original consolidation, sometimes you will get a bounce. That bounce is going to cause price to aggressively trade lower. Okay, that bounce is going to cause market to trade aggressively lower. So watch that, or the high. Let's go back to the 1 hour time frame. Watch that or this high, that high, because if they take out this high, then it's gonna drop. It shouldn't do that because there's an imbalance in here, but if they trade up, I want it to be like this. All right, but if they do something like that, I want it to be boom, quick down. Okay, that's what we're looking for. And yeah, that's pretty much it. I only came back for another 10 minutes. Do you have any question? If you have any question, feel free to ask. And yeah. Any question? You guys have any question? Okay, I guess there's no questions, so I am going to end the session. next week is going to be interesting, pretty interesting, because it's the first week of the month. All right, let me put you onto some expectations that I'm expecting. That's quite a word, expectation that I'm expecting. Let me check this trade because it looks like it's struggling to go up in here. Oh, okay. That's what you were asking. Let me change the topic. Time. Okay, save. And copy that. I have a bit of time, so let's do this. Let's do part 2. Let's do a part 2. Okay, so we are going to do a part 2. I've been asked several times this question, and I just want to address it as I have time, and then move on. All right. So the question is, let me read it. Auto blocks narrative on different time frames like strength or similar. Could you teach on that? Okay. So I personally view this pattern, anytime I see that pattern, that to me is an auto block. Okay, anytime I see that pattern right there, to me that is an auto block. All right, so I don't see auto block as the down candle prior to the move up. That's not how I see auto blocks. Now you have to think a little bit. Okay, when we say order block, what does that even mean? It's just a name. It's not a candle. Okay, that's the mistake a lot of people do. Auto block is just a name given to something. Okay, so if you've been looking at auto blocks as okay, the last down candle prior to the move up, then you are not looking at an auto block because you are looking at the candle. Okay, you are looking at the candle because for you to identify an auto block, you need to understand what is it actually doing, right? And we look at price with an institutional perspective. it's on the order block. We look at price with an institutional perspective, okay? Or I look at price with an institutional perspective. If an institution is going to buy, based on what we've learned from ICT, what do? They buy with down candles, right? Yes. But are they just buying with a down candle, or for them to take a trade to the upside, they need to get someone to be wrong, right? So the logic is, if they are going to take price up, then someone has to be wrong for them to take price up. Hence, I use this pattern as the order block. So I don't use the down candle as the order block. I use this pattern here because if it's going to go up, then they are going to take a sell to take price out, down, to take any individual, right, that is profitable, accumulate the longs in here, and then take price up, and then mitigate that sell. Okay, so if that's the case, then this pattern here is the order block. It's not a candle. So when you're looking at price, you need to look at price with that perspective. Yes. First of all, you have to have a narrative as to where price is going, right? You have to have a narrative. Now, here, right here, if I say this is an order block here, you probably be thinking, yeah, right, you're crazy. But it is. Why? Because it has this pattern here, the pattern that I drew. We have this low, someone sold, took anyone that was profitable out, and then price went up. What did it do? It came back down and then shot up. So they established a position in here. So that is the order block. It's not the candle, right? When you understand that, then you can now look into the specific candle that you call an order block. So if you understand what I've just explained here, then you go and study the last down candle prior to the move up. That's when you can identify this one as an order block. So for me to classify, I was going to say clarify. For me to classify this down candle here as an order block, it has to have this attribute. If it doesn't have this attribute, I'm not interested. Okay, couple that with narrative. So we are going up. So if I see like this one here, this one, it's an order block to me. Why? Because I can see it based on the candle structure, that if I investigate it on the lower time frame, it will have this pattern. Okay, this one. So let's actually investigate it. Alright, so this candle here, that down candle, that green one, let's drop down to the 1 minute chart. There you go. Notice that on the 1 minute chart we have this low, this high, this low, and price went up. So that, to me, here is the order block. Okay, it's not the down candle. Forget that one. Okay, ICT always says that. Forget that one. Those are Mickey Mouse candles. It's not that one. Order block is it's a pattern. It's like an idea of what price is doing. It's not a candle. Okay, but you can break it down to be a candle if you want to. So this is how I view it, and I need the down candle to have specific criteria. It has to have this, and then price going up. So on the higher time frame, come on, come on, come on, come on, come on, come on. That's my son. Come on, come on, come on, come on. There you go. So on the higher time frame, no, 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 no. There. This is an order block to me. So if price retraces to this level, I'll be buying. I'll be interested in buying. Why? Because of what I just explained. Okay. What about this one? Right? What about this one? Well, if this is going to be an auto block, I have to investigate it. I'm not just going to take it because it's the down candle prior to the move up. No, you have to investigate it, right? So in this time frame, I don't see that pattern. Okay, I don't see the same pattern that this one had here. So this, to me, that's not an auto block. So I'm not interested in that. Okay, investigate this one. Investigate this one here. So I drop down to the 1 minute. Does it have the pattern? Looks like it. We have a short-term low here. Price takes that one out and then goes up. So yes, I like that. Go back to the 5 minutes. That's another block. I'm interested in that. So this is how you quantify or identify another block. Don't take it because it's a down candle prior to the move up. You have to take it because it has some criteria to it, right? And then you can use it as an auto block. And then narrative. Okay, so narrative comes first, because if price is going up, we want people to be wrong for us to be right, right? Think like an institution. If we are buying with millions, let me go and check my trade. There we go. Nice. Right. Think like an institution. Okay. Stop thinking like a retail trader. Think like an institution. If we are buying with millions or billions of dollars or pounds or euros or naira, right, or whatever currency your country has, if we are buying, right, don't we want liquidity? Don't we want people to be on the wrong side so we can take their position? That's the whole game trading is. Because who is right and who is wrong? Who has big money? So if I have big money and I see that you bought here and price went up and your stops are here, those stops in trading, that's liquidity for me. If I want to buy, you are willing to sell down here, right? So a buyer and a seller can agree down here. Okay, so I pick up your position, which you clearly define that you want to do that here, and then price goes up. So what ICT usually says is that the auto blocks that leaves a gap. Why is he saying the auto blocks that leaves a gap? It's because for this position to be for this position or for this down candle to be effective or to be quantified as an auto block, the movement away from there is important, right? That the movement away from here is important because that clearly defines that someone did actually buy down there, and it shows you with the gap. Okay, so if I say, let's use ourselves as an example. I am bank A. I have lots of money, and we have bank B. They have money but not like me. So bank B thinks like price is going up, so they bought down here and it went up. As soon as price went up, guess what? They jammed their stop loss below this. So what did they do? They say they bought with 10k, 10 mil, right? And then jammed it. Price went up. They jammed their stop loss here, 10 mil down here. And I'm looking to buy. And I'm looking at the market, and I can clearly see that someone has 10 mil down here that they want to get out in case they are wrong, because they don't want to lose more than 10 mil. What do? I have 20 mil. I sell 10 mil up here, take it down there, and then buy 10 mil down there. So I agree with their 10 mil down here, and then price shoots up. Now once price shoots up, I'm in drawdown. Price comes back, I mitigate that drawdown, and then I buy again. Okay, so hence we want that gap to be here, right, for us to know that there was a buy going on, and then any retracement back to that level, that's a buy to continue going up, right? So that's what you want to classify as an order block with the narrative. So the narrative has to be on the higher time frame basis. Remember I said price was going up here, so that's the narrative. So when I see this pattern forming right here, that's a buy. That's the same thing. It might not look like the one you are used to, but that's the same thing. Let me zoom in. Okay, here, that's a buy. That's the gap, right? It's the same thing on that lower time frame that I showed you. Price is fractal. But what happened here? Is it not the same thing with the gap? Yes, narrative, right? Anyone that was selling here has no idea what they're doing. So if this is Bank C is out of sync with the market. Okay, Bank C has no idea what the market is doing, so they are just, you classify them as the retail traders because they have no idea what the market is doing, so they sold up here. It could be a good trade for them because maybe they go out here, right? They took a sell here and then they go out here, so they are no more in the market, and then they bought down here. Could be. Okay, but the narrative doesn't support selling. So even though that's the same pattern up there, right? Price went down, leaving a gap. The same pattern, but context is wrong. So price is just gonna trade through it. That's why, again, you need narrative, because if you have narrative, then obviously you will trade the right order blocks. If you don't have the narrative, you are going to trade the wrong order blocks and you will get hammered all the time. Okay, it's crude oil. It says here, crude oil. All right, so there you go. Now let's go to Bitcoin. Okay, let's go to the weekly time frame. Let's go to the weekly time frame. Now you might not see it that way, right? That's why you need to forget the idea of the last down candle prior to the move up. Here is an order block. Here is an order block. Why? look at the reaction from there, okay, and then think what happened here for that area to be an auto block. Drop down to the daily. What do you see? What do you see? Do you see anything worth kind of looking at? Let's go back to the weekly. What do you see? See, you have to start looking at price with a different eye. Okay. Am I live trading? Yes, I am live trading. That's a low. Okay. That's a low. Price takes it out. Right? Price takes this low out and then went up. So by what I'm explaining right now, I'm looking for something else. Yeah, let's use this. So with what I'm not that one. Yeah. I'm looking for something. Okay, let's use this one. With what I've just explained right now, you can look at this at the start. Okay, that is an auto block. Whether you like it or not, that is an auto block. You just don't understand why it's an auto block, and I'm giving you the explanation because we had that famous pattern here. Someone took price down to take out this low and then went up. So this is just a retracement to come back and buy again to go up. Okay, so start looking at price with that mindset, right? Start looking at price with that mindset that if I'm looking to buy, there has to be someone wrong already. I've given you a big hint. If I'm looking to buy, there must be someone wrong already. If I'm looking to sell, someone has to be wrong already before I get in. Okay, so this is someone being wrong already, then I'm buying here. Okay, yeah, this is someone being wrong already, I'm selling here. Okay, start thinking like a professional, an institutional minded trader. You want to take out people. It's a game, right? Think of trading like that. It's a game, and the fittest will survive. If someone is in there, kick them out and then you take their position. That's what's happening. So anytime you want to trade, make sure someone has been taken out. Okay, I've given you a huge hint. When you want to trade, make sure someone has been taken out. If no one has been taken out, don't trade. Right? If you're bullish, let someone be wrong on the downside and then you go in. If you're bearish, let someone be wrong on the upside and then you go in. Okay, I've got 8 minutes and then I'm done. Fib projections. Okay, using fib projections can sometimes aid you on whatever time frame you're trading, can aid you to see where these are going to form, where these stop runs, I would say form, but where they're going to stop, if it's going to be a stop run. Say you are bearish, right? We have this high, this low to the high. Levels. when you're anticipating a stop run, the stop has to be in between this. So let's say you're anticipating a stop run on a pair. Okay, you're anticipating a stop run on a particular pair because you can anticipate it. All right, when market opens and you say, okay, I'm looking to go bearish, but I'm anticipating a stop run, this is how you want to do it. You want to measure the range that has been created, whatever range that you are using. So if it's to the downside, measure the range and then highlight the 0 to 27. If it's a stop run, if it's going to be aggressive reversal, the rate should not move beyond the 0.27 level. Okay, so like for example here, right, that rate doesn't go beyond 27. Same thing here, that rate doesn't go beyond 27. When it reverses like this, that is your opportunity to go short, and then the opposite is true. So you're looking at a reversal like this. Anytime price goes above a high and it doesn't breach the 27 level and it rejects and it breaks a short-term low, that's your trade. Okay, so identify, let's say probably you might not see it, let's say you don't know that there's going to be a stop run. Just pull the fib, okay, and then check and see, does the stop stays in between this? If it does, as soon as a short-term low is broken, that's your trade, go short. All right, because that is a stop run. If it goes to the 618, chances are it's not a stop run. Okay, if you are taking a trade and you measure the range where price went above a high and it went above it by 618, chances are it's not a stop run. Okay, it's not a stop run. You can anticipate. Now this is something that I back tested back in 2020 August, because I was at the time I was so on fire. I was so on fire. If it goes to the 618, right, look at the 25 level, chances are it's gonna come back there and then go higher. All right, if it goes above the 27 and it goes to 618, chances are it's not a stop run, it's gonna come back down to the 25. So what I'm showing you, you have to use a bit of say levels. Say if it's coming to the 25 level, let's say there's a gap, there's an auto block, that's what I'm saying. So look at this one here, right? Measure this and then price goes boom, way too high, right? You don't want to be buying that. You don't want to be selling once the low is taken, because chances are it's bullish. You don't want to be selling. Okay, do a little bit of back testing, you will see what I'm talking about. Like this, right? It goes way beyond 27. That is not a stop run, right? It's not a stop run. Don't sell when price breaks a short-term low. Okay, the stop runs are not going to go beyond the 2.7 level. Okay, so that's my gift for you guys. When I started the first session, I said, don't go away, I'm gonna give you something to go today. That's my gift to you. So let's go to why I sold this one up here. Why did I sell up there? Well, we went above that high, so I used this to that. That's the range. It went boom, rejection. Anywhere from here to here for this trading range is bearish. If you are anticipating a reversal, see, you have to have a narrative. You have to know that, okay, I'm anticipating a reversal. Then you can apply it. Okay, if you are anticipating a reversal, apply that, and you will see how amazing it is. You don't have to sell up here. Over time, with confidence, you can, but you don't have to. Short-term low broken, boom, you sell short. I sold here, I sold there, and I sold here, and this morning I sold here. Okay, and someone was asking me, are you trading it live? Yes, I am trading it live. If there was a way for me to show you, I would have, but I don't have to prove myself to you. I don't have to prove myself to anyone. I prove myself to myself. Okay, you see that you take it or you leave it. All right. Okay, so that brings me to the end of today's session. Hopefully you've learned a lot, and it's gonna help you with your trading. In September, it's gonna be interesting. I'm gonna come up with some new ideas. It's not going to be live sessions, but I'm gonna come up with some new ideas to help you guys. So stay tuned. I'll make the announcement when we get to September, how I'm going to proceed. Instead of doing a live session, what can I do? Maybe record the videos and put them on YouTube, or just record them and then put in the Telegram. I don't know, but time will tell. Okay, so enjoy the rest of your day, and I'll see you guys next week. All right, be safe.